Hello everyone and welcome back to the Innovation Markets Forex course lesson number 6. Today's lesson is a very exciting lesson and something that you need to know as a trader, and just like our previous lessons, understanding what we're going to show you today will change your trading forever. Today's lesson is about head and shoulders patterns, and it's a very important and actually one of my most favorite, well, it's my favorite pattern, but one of my most favorite things that I use in trading. What you'll learn today helps you with two of the most important parts of trading: understanding when to enter the market and understanding when to exit. Because obviously it's so important of knowing when to enter a market, when the right time is to buy or sell, but you also need to know the right time to exit the market. And what I'm going to show you today is helps you identify and do exactly that. So I'm very excited to show you this one, as with all of our course lessons. So let's break this down. We have just gone over price action part 1 and part 2. Hopefully you've had some time to go through those videos and really do your homework and really get used to what we've taught you. We have had loads of messages just like in our previous lessons. We've had lots of great feedback, so thank you for that. Those who have left a comment on the YouTube channel or got back to us on our direct messages on Instagram by giving us the feedback and telling us how much our first 4 or 5 lessons have changed your trading completely. So it's great for us to hear that and exactly why we do it. Now today is something, as I said, I'm quite excited to go through it, and it's got its own personal video or breakdown because it needs it. It needs to go down, we need to break it down in detail. We can go over it lightly, but as it's one of my favorites, just like everything else, I like to go into things in detail, as you guys know. Now, head and shoulders, very important. It moves on, and like all of our lessons, everything is coming in stages so that you learn everything in the correct way. We've built those foundations and now we're starting to build up. We're starting to build up on top of those foundations. Price action, in the last 2 videos, we spoke about the candlesticks that you can see in front of us, and we spoke about the wicks. And then what we started talking about was how we start piecing that together with the previous course lessons. So part 1 of price action was talking about the physical candles themselves, speaking about the wicks, and then explaining everything about them, giving you the five major candlesticks that you need to know so you can sort of disregard the rest and not get confused with the market. And then part 2 showed you how to use those candles. Once you understood them and understand the meaning behind them, part 2 then made you understand when to use them. So we started building confluences for taking a trade. So as we know from the last lesson, the more confluences you have, the more confidence you have in taking a trade. So we started building that up, piecing it together with course lesson 1, 2, 3 and 4. So we understood where we want to read price action, how we can take trades by building those confidences, for instance by combining all the previous lessons. So finding for instance, let's say a shooting star here, a shooting star candle. Once it made the 3rd touch on the trend line, which was lesson 2, once it rejected off, let's just say, a monthly resistance, which was lesson 1, and it hadn't broken market structure, which was lesson 3. Those 3 things alone, and the price action on top, number 4, puts you way ahead of many traders in the market, because a lot of people don't do the simple things, and that's all you really need to do. Now today's lesson is really exciting because the last lesson we spoke about confluences. If you remember, I had text written out, confluence number 1, 2, 3, 4, 5. As the more confluences we can get, then the higher probability our trades are going to be. Now what I'm going to show you today puts the probability in your favor even more, and who doesn't want that? It's like if you go to a casino or wherever it may be, if you're placing a bet, if you know that you can have an 80% probability of taking a trade and being correct instead of 50, obviously you're going to go for the 80%. So this is what I'm going to show you today. By adding this onto a trade and adding what I'm going to show you today, adding that on top of your confidences for a trade, you're boosting your chances to become even more profitable and even more successful. And like I just said at the very start, it's the key factors that people don't really think about. Obviously everybody thinks about entries, where can I enter the market, but they don't always think about where they're going to exit or looking out for signs to understand where they can exit the market. So Head and Shoulders does exactly that. That sort of defines what Head and Shoulders does. It shows us where we can enter the market and it shows us where we can exit the market. So the main reason we use it is to enter. Is we want to get into the market, we want to make profit obviously. And by using Head and Shoulders formation, it simply shows us where the market is potentially going to turn. So I'm going to start off, that was sort of just giving us a brief overview. I'm going to start off and break it down in detail as always. So in front of me, some of you who've never traded before, you're probably thinking, what is he talking about? Head and Shoulders, Head and Shoulders. It sounds like a nursery rhyme. What is he talking about? Head and Shoulders. Well, in trading, there's some weird technical names. Like we went from the candlesticks, we had tweezer bottoms, we had tweezer tops, we had shooting stars, we had pin bars, morning star, evening star. Now, when it comes to patterns, there's a few different names, and we're going to go over each pattern. But the one I use the most in the patterns is Head and Shoulders, and we will be going over the next one in the future videos. We'll be looking at triangles. We'll probably touch on double tops and double bottoms today, and move into it more in the next lesson. There's flag patterns, channels, but the one that I use the most, and quite frankly it is my favorite, is Head and Shoulders. When I see Head and Shoulders in the chart and I'm trying to enter the market, if I see the Head and Shoulders, that's sort of like the icing on the cake. It's like, okay, that's my confirmation, I'm going to take this trade. So what is a Head and Shoulders? Head and Shoulders is a pattern, as I'm explaining, and what we can understand, and why I got this chart in front of me, because it gives us a perfect sort of Head and Shoulders formation of what we're looking at. So as I've mentioned, well, let me break down exactly what Head and Shoulders is first, and then we can start getting into exactly where we look for it in the market. So Head and Shoulders is basically in the name. It looks like a Head and Shoulders, and it's about price action. So that's why it's coming just after the price action video. Head and Shoulders. So let's have a look at what I mean by Head and Shoulders. Let's get an arrow. Let's get the magnet tool on, and let's have a look. So this is price action here that we can see moving up, coming up to make a higher high, a higher low, a higher high. Market structure, like we explained in lesson number 3, course lesson number 3. And Head and Shoulders is basically explaining what we see in the market. It's a formation, it's a pattern, and a better way is to call it a formation. It's a formation of price action. So what we were looking at previously was price action on each individual candle, or a few candles put together. For instance, here we can see a morning star formation from the previous lessons. We can see a bearish engulfing. So we're sort of looking at more individual price action. But what patterns do is they give a name, or they make us understand what an area of price action is doing, and that's why it follows the price action lesson. So here we can see we're moving up and making a higher high, a higher low. Now if we just draw on this arrow, we can see here we're making a higher high, and then price pulls down, makes a higher low. So I need to turn off this magnet, got the wrong tool. We can see we've made a higher low. Then price is then pushed up, made a higher high up here, and then it's come back down, and as you can see, made a higher low. And now it's coming up and making a lower high at the moment, and could potentially come down and potentially make a lower low. Now, if we just study and identify what we see in the market, we can quite clearly see a sort of a formation of what we call a Head and Shoulders formation. We'll just keep this out. You can see here, move up, this is what we call a left shoulder. Move down, this is also very important. Everybody concentrates on the peaks, but they don't concentrate on this here. This is a left shoulder, so what would you expect if you got a left shoulder? Then you move up, you've got a head here. What would you expect this to be called? Very, very important, is the neckline. So imagine you've got a left shoulder here, price comes down, finds support, price pushes up, creates a head, price pushes down, finds support here at the neckline once again, price pushes up, makes a right shoulder, from the left shoulder, makes a right shoulder, and then we normally see the price, the market push down. So you can see here quite clearly, if we just highlight like this, there's a left shoulder, there's a head, and there's a right shoulder. Quite visible. But just as I explained, very, very important is the neckline, because this is a strong area of support. So now that I've just highlighted that out, you can see a little bit more. You can see it just shows itself up a little bit more obvious when just looking at it, that we can see a left shoulder, head, right shoulder. Now often when doing this and posting this in our group and community, we just use this tool here, and we can quite clearly see that this is a level of resistance. You can see prices come up, found left shoulder, support, head, came back down, support, right shoulder, and came back down. So first off, what we're going to understand is what exactly, we're just breaking down what is a head and shoulder, and what is that in the market if you're brand new to trading. It's when you can understand that prices come up, made resistance, came down, found support, carried on pushing up, carried on with the trend, pushed up, but then it's come back down, found support here, which can also be called what, guys? What could this be called here? So price, this is from course lesson 3 to give you a clue. Higher high, higher low, higher high, price coming down, equal higher low. So here is where we could look at potentially, where from course lesson number 3 is where we look at entering the market to take a long trade up. But this is why we now need to understand why we need to know about head and shoulders formations. Because if we're looking at higher high or higher low, this is very important. Now you see, because there's two reasons. Not only is this a support, but this is a higher low. So this is very important to understand this level of support. But if we've gone on and made a higher high, price is now pulled back and making a higher low. Or what is actually happening here is an equal higher low. If you're looking at this, you might be wondering, thinking, well, this candle broke down a little bit lower than the previous high low. But remember, from market structure, the candle body needs to break below the wick of the last higher low. So this is a higher low here. Price pushed up, came back down. See how the body of the candlestick didn't close below this previous low? So therefore, this still means that this is still intact, and that means that we can see a push up. Now, when we see that, what that means is that we have what, guys, from course lesson number 3? We have a great opportunity to buy this market because there's minimum risk and there's maximum reward, because we have two options here. Price can come back up to resistance, or price can come back up to form a resistance here, second target, or it can push on and make a new higher high, which means even more profit. So you can see how much profit there is compared to the risk. Now, we understand that, so we know that this is an important area, and we also know that this is a neckline, because this is a neckline for potential head and shoulders formation forming. So we can see here quite clearly what that head and shoulders is, and price is running up and currently finding resistance at this right shoulder. So we can see that we're forming resistance here. We're also starting to form a new downtrend, because here we've got a lower low, a lower high, a lower low, and currently we can see that price is making a lower high. We haven't been able to break above this last lower high, lower low, lower high on the downtrend. So right now there's a lot going on here that we can decipher and start to break down, and this is on the daily chart on this current pair, Aussie dollar, US dollar. But here I'll just quickly go back, see that pin bar on the daily time frame, that goes back to the lesson in price action number 1 and number 2. See how we identify the higher low in course lesson number 3. So when price comes back down, we wait, and we see here that pin bar, that daily pin bar, then that shows us we can buy from this area, and we can buy and wait for the move and take this move up and make profit in the market simply by waiting for price action that we showed you on price action number 1 and combining it with what we showed you in course lesson number 3, market structure. So we know that if price breaks below here, then there's a downtrend confirming. But at the moment, what price is doing is it's going up for another test to try and break the highs. Here is where there could be a nice short trade because price is currently finding resistance here, and if we take a short trade here, there could be a massive move to the downside, because this could be the beginning of a new trend. However, if this was to lose, it doesn't matter too much, because it's a small risk. You might lose 1% if you're always trading 1% risk, and you might take a loss on that, and the market continues to move up and continues its trend. But hopefully by that time you've been able to get a trade in here, so you could be in the market making profit already. But here is another highly profitable area to take a trade, especially if you can combine it with other things that we've taught you in course lesson 1, 2, 3 and 4. So if you can start to see that, like here, what we can see is we've got some confluences building. You've got a lower low, a lower high, a lower low, current lower high. From this lower high, we've got resistance coming through here. So it's two confluences. There'll be Fibonacci levels, which is something that we're going to get to in future lessons as well. For instance, I'll just throw in a Fibonacci for anyone who hasn't seen it before. You can see here that we're rejecting the Fibonacci levels, and we can expect price to potentially make a move down. Now what we want to do is zoom in on this area, and we want to then look at that area to look at potential reasons for taking a short trade. But right now, just take a step back quickly, is again, why do we use this? Why are we looking for head and shoulders formations? Well, what this is showing us, and we just forget about the actual, I'll leave these on for the moment. We forget about the arrows and where price might go. What we want to do is always understand what the market's trying to show us. What a lot of people do is they try to take a trade and impose their beliefs on the market. So for instance, they want to sell here, so they look for every reason why this might be a short trade and try and take that trade. But you don't want to try and put what you see into the market. You want to just take the market for what it is and see it clearly. And that's why, like in other lessons, I always like to have a clear chart so I can see things clearly. But I like to read the market. So trade what you see, don't trade what you think. And that's something that you should write down and always have above your computer or above your screen. Trade what you see, don't trade what you think, because what you think is what you are hoping that the market's going to do. But don't do that. Trade what you see and what the market is actually showing you. And we covered that in price action part 1 and 2. So what this is showing us, and what I'm going to teach you now, is what head and shoulders formation show us. What it's showing is we've had a drive up here. As you can see here, we've had this first drive up here. We found resistance. Price has pulled back down, so it showed that we had some resistance. Price is pushing back up to test that resistance, and it's broken through. So this area of resistance has been broken, but now we've broken back below. We come back below. We come back to retest it here once, twice in this occasion, and we come down to the neckline. So this is the important area now. What price is doing is making another attempt to drive higher. So price has come back down below this level of support, now acting as resistance. It can't break above. Now price has tested this neckline, and what this becomes very similar, if I just quickly put this on, is very similar to what we taught you in course lesson number 1. So if you can just imagine that's a monthly resistance level, and imagine that this is a monthly support, what we can see is that price is broken above. Let's just pretend it's a monthly resistance, broken back below the monthly support, retested as resistance, come down, retested as resistance, it's come down, met this neckline, hasn't been able to break through, coming back up, retesting resistance. If it holds this as resistance, we can expect what? I drew out something very similar in course lesson number 1. We can expect price to come down, and that will be our first target, to come back down and retest the neckline, or as what we're using as an example, monthly support. And then for price to then continue pushing down to the next level of support. And then what would we expect from there, guys? And after we finish this, go back and maybe look at the first few minutes of the course lesson number 1 and see how we're going full circle, how everything is entwined in trading. Even if you keep the basics simple, a lot of people look at head and shoulders, but they probably don't really break it down and how simple it actually is and what price is actually doing. What it is, it's a level of support and it's a level of resistance. So here, if we broke this level of support, if we broke the neckline, that's where we get some real bearish momentum. Because why? Because at this point here, once the neckline is broken, that confirms that we are now in a downtrend. And why is that? Because what we taught you in course lesson number 3, market structure. this is a higher high, this is a higher low, this is a higher high, this is an equal higher low. This is not being able to make a higher high. And then if price breaks this level, very, very important here, if price breaks that level and invalidates these two lows, then it now means that price is in a downtrend. And that means what we normally see here is a big bearish move come in. And because everybody identifies it, just like I'm explaining it to you now. So if you see the next time you see this in the market, you'll know that that means a sell. So we normally see a big drive down here. But as always, market structure, market has to pull back and it's going to come back. What is it? Because we have people getting out the market, taking their profit. Then price comes back. What's it going to do? It's going to come back and try and it's going to come back and retest the neckline it's just broken. Sorry, the wrong thing. It's going to come back and retest the neckline it's just broken. And then usually from here, this is the third wave of selling. And normally here is where you see the big sell-off, because here is early people like us getting into the market because we're happy to risk 1% on our accounts in order to make potentially 4 or 5 or whatever percent this move down may be, and we're skilled and we now understand how the market moves by understanding price action and understanding head and shoulders formations. But usually for most retail traders, it's too late. They get into the market down here, so they've missed a lot of the move, getting in on the right shoulder. But often what we see is a big move down here on the next move down, because everybody can identify that the neckline has been broken. They can identify that price has come back to retest resistance, and if price retests resistance, then and it holds, what do we expect next? We expect to push down. Now, is there anything else that you see on this chart which would, from our previous course lessons, which would identify this as another reason to sell? And you can see how it all ticks together. Lower low, lower high, lower low, lower high, and then a lower low. That would be market structure, course lesson 3. Then we go just bring it back to course lesson number 2. What we would be looking for is a trend. So we could likely see price come back up here, retest the resistance, retest support, and then all of a sudden what you can see here is you have two confluences, like we spoke about in the last lesson. You have two confluences where you'd be looking for a sell, because we've broken support, we're coming back to retest resistance. See this area here? If I go to the candle bodies, so we've broken support, we're now coming back to retest as resistance. Then when we come back and retest as resistance, there's also a trend line resistance, another form of resistance. Then we also can identify we've broken the uptrend structure, and we're now in a downtrend. So now we know that we're going with the trend, so there's a higher probability. Then we also now know that we've seen a head and shoulders formation, and what I'm going to explain in a minute is that when you see a head and shoulders formation, or you can identify a head and shoulders formation, it tells you when a trend is topping out at the top, or it tells you when there's going to be a reversal at the bottom. That is the beauty of the head and shoulders formations. Then, as I can show you here, there's Fibonacci levels, which we're going to teach you soon, which again put the icing on the cake and put the probability into your favor even more. So we've gone off a little bit on tandem here just to show you exactly how all of this mixes together and what we can expect. Let's just bring it back a little bit now and just cover a point that I just made. The main reason I love head and shoulders formations is because they tell me when the market is coming to an end. Now, if you think about when you want to get into a trade, especially swing trades, so if you're a swing trader, these are beautiful for you. Just imagine this is a big trend. It's great to get into the middle and catch and ride the move up. But if you imagine this is a trend up and down, then if you can get in, at the bottom, then there's obviously a lot more profit to be made along the way, and then you can add more entries along the way, because the head and shoulders, you find them day in, day out. I'm going to show you in a minute how often you see them, all time frames, everywhere, and they help you get your entries. But on the higher time frames, like the daily time frame that we're currently on at the moment, if you see on the higher time frames, you can see potential trend changes. and you can get in at the bottom of the trend. And of course, if you see, this is what I said at the start of the video, if you see a head and shoulders formation at the top of a trend, then you know that the market is going to change. So therefore, you want to get out of your long position, and then you can enter your short. So it's twofold here. Not only does it show you that you can get into a short trade, but it also tells you it's time to take profit, so that you don't see the market move all the way back down. You haven't been able to understand how to identify a head and shoulders formation, and if you don't know, then you're going to miss out. You're going to miss out on knowing when to get out of the market. And then what could happen is the market then starts pushing down like this, and if you haven't identified the head and shoulders formation, you can reduce your profits massively, because the price starts moving against you. You haven't realized that the trend has changed, and then you end up making a lot less profit. So what head and shoulders mainly helps you do is it helps you understand on any time frame when that time frame or that move is coming to an end, because it's showing exhaustion in the market. And what I mean by exhaustion is here, you can see we've had one push up, great. We've had a second push up, price still looks bullish, comes back down, retest this level, comes back up, retest it again. If it can't break that level, and it can't break it for that third time, then price is more than likely hasn't got enough left. The bulls don't have enough strength to break through this resistance, and price will roll over to the downside in an uptrend. So this is a daily chart that you can see at the moment. I'll just break this back down. I'll leave it for a minute. You can see here, this is a daily chart. Let's just have a look here. Where else can I see? So this is a daily chart. I'm just going to go back slightly and just have a look, and we'll do this on the lower time frames. Let's just have a look. Where else can we see? Here we can see head and shoulder formation. Left shoulder, neckline. Head, neckline. Right shoulder. So see, price has pushed up. It's come all the way back down. It's coming back up to retest the right, make a right shoulder to this left shoulder. See here, and then boom, it's come down. Now, if we just look at this, we can see there's an area of support here. That's the neckline. So price came up, made a left shoulder, support, neckline, head, looks very, very bullish, came all the way back to make a what? An equal higher low. So you can always look to have an entry here. But as we have an entry, we come up to this area of resistance, so we could be making profit up to here. But then we identify that this is a right shoulder to this left shoulder, there's resistance here, and then the price pushes back down. But see what I said earlier, once price breaks this neckline, see how the bears step in, because everybody understands, okay, well, this pair has broken its market structure. So see, there was a move down, slight move up, a slow move down to this point. But once that was broken and it retested, we can quite literally see, bang, price moved down. Price moved down very, very fast. And head and shoulders, that was, see, that shows you the top of this trend. So we had high, high, higher, low, high, high, higher, low, high, high, higher, low, high, high. But then the right shoulder identified to us that it was running out of steam, and it was time for this market to roll over and start pushing back to the downside. Now this is head and shoulders. There's also inverse head and shoulders. So if you see something at the top, a head and shoulders identifies when a market's going to turn at the top, or at the top of a trend. Then obviously we can find these at the bottom of a trend also. So let me just see. Let me just come back down. I'm going to break it down on the 4-hour chart as well. Let me just quickly go back to my main chart so I can just show you that quickly without confusing it. So as I explained, head and shoulders at the top of a trend is where the place where you want to be looking for a head and shoulders formation is at the top of a trend, or just looking and waiting to identify them. You don't really need to go looking for them, but if you see what them form and you see them start to be, you can identify one in the market. It can tell you that this is potentially the top or the bottom of that current move, because the market is there's exhaustion in that move. The trade, the bulls or the bears can't push up higher or lower. And I just want to quickly go back to this before I find one, so I can show you quite clearly visually what I mean by an inverse head and shoulders. So Here is a head and shoulders quite clearly, left shoulder, head, right shoulder. Inverse head and shoulders, I just flipped the chart upside down. If you're looking for an inverse head and shoulders, it would look like this. Price drives down in a downtrend, pushes up, goes down for a new push down, makes a new lower low, price pushes up, finds resistance at that prior resistance, so equal lower high. So this is where we would be looking to get into the market from market structure, course lesson 3. This is where we're looking to get into the market. But then if you are getting into the market and you're taking a swing trade down, and you get to this point and you're still holding your trade and you don't know about head and shoulders formations, you're going to be none the wiser. So when the price gets to here and starts to reverse, you're not going to understand why, but now you will. And what you can do is you can look at taking a trade in the opposite direction as well. So you can make profit from both sides of the market and understand what is happening on both sides of the market. So here you can see price pushed down, pushed up, is failing to break lower, is also making a higher low from this higher low over here, and it looks like price could potentially move up. So that's an inverse head and shoulders formation. So just to recap, when you see these, I'm going to break down some more. When you see these, they normally, when you see these, they mean the tops and bottoms of a trend. Because if you go to most tops and bottoms of trends, you will find a head and shoulders formation. Whether that's on the daily time frame or the lower time frame, you will see one, and we're going to go through that now. Now, normally you will see these on a daily time frame if it's time for the trend to change, the overall trend. You will also see these on the lower time frame, so you can make quicker moves on the 4 hour, the 1 hour, the 30-minute chart. But just like everything else, again, write these things down, guys. Just like everything else, candlesticks. Well, start from course lesson number 1. Support and resistance, trend lines, candlesticks. Everything on the higher time frame is stronger. The higher the time frame, the stronger the support, resistance, trend line, candlesticks, and also patterns. So if I see a pattern on a higher time frame, like a daily time frame, it fills me with confidence to take that trade, because it's a higher time frame. There's a higher probability of that playing out and that coming through. The lower the time frame, the lower the probability of that coming through. So if you're looking for if you spot head and shoulders formations on the lower time frames, you can get into a trade, but you might, depend on the time frame, it will depend on how long you might want to stay in that trade for, potentially until you see a head and shoulders formation forming in the opposite direction. In this instance, we can see this is on a daily time frame. So what this is highlighting to us is that, okay, let's have a look. Let's zoom out on this pair. This is Australian dollar, US dollar. So this pair has been moving up, moving down, and it's been in a strong uptrend for a long time. Daily's moved up, came down, made a move up. It's struggling to stay above, it's come back down, and it's struggling to break and push up higher. If this holds and price breaks down, this means that the whole daily trend could be changing. So we can identify from here that there's a strong chance that this whole trend might be changing, which means that there could be a massive, huge swing trade on the cards. Here you've got lower low, lower high, lower low, lower high potentially. We know that from market structure we could potentially come up here and make an equal lower high, but anywhere within this region is a potential short entry, because price could roll over, come back down to this neckline, break lower, as I've showed you in that previous in historical price action, and break lower. So on the higher time frame, the stronger it is, but obviously the slower it will also play out on a higher time frame. Remember, for candlesticks to play out on a higher time frame takes weeks and days, where on the lower time frame it will play out quicker because it's in a short space of time. But here, if I just clear this all back now, I'm going to clear this all away. Here, without knowing about head and shoulders formation, this looks like random candles on a chart. But all of a sudden now, and you're going to learn this even more now as I go deeper, all of a sudden with the naked eye, this takes training, but for myself, who've been trading for many years, I don't really need to use the tools to highlight it. I can see it. I can clearly see, okay, there's a neckline, there's a left shoulder, there's a right shoulder. Because just like price action, the more hours that you spend on the charts, it just becomes like a second nature. It just becomes like speaking another language. You just become fluent in seeing it. And that's why I like to keep a clean chart. But it's quite important to just note that see how this can just look like random price action. And if you didn't know about head and shoulders formations, you wouldn't know that there's a very, very strong resistance coming in here. If you didn't understand about market structure, you wouldn't understand about lower lows, lower highs, let me quickly just stretch this out. Just a quick lesson here. Here, lower low, lower high. Lower low, equal lower high. Perfect place to take a short trade. Came back down. We know from the uptrend that this is the high, higher low, high. Now there's a short-term trend coming down, but see here, perfect place to take a trade. Why? Pin bar from the last lesson that we gave you. Market structure, the last higher low, equal higher low, minimum risk, highest reward. Price is pushing up. Now we know that price can come up towards this area here and still make an equal lower high, and it could roll over to the downside. So price could push up to at the moment 0.7841, and this could be a great area to take a short trade because it's potentially forming that right shoulder. And should it break, come down here, you'd want to take some profit here. Should it break this neckline, then it could be lots of downside. But this is on a daily time frame, so this is telling us that there is a potential that the trend is about to change. But as I said, unless you knew that, unless you could quickly identify that there was a strong resistance coming in here and that there was a head and shoulders formation forming here, just like that, left shoulder, head, right shoulder, neckline. If you weren't able to understand that, if you were taking a short trade, wouldn't understand why there was such a strong support here. And if you took a long trade here, you won't understand why you're finding so much resistance here. And as I said, just understanding that, knowing that head and shoulders formations are found at the tops and bottoms of trends on nearly every single trend. If you go looking for them, you'll be able to see them. Now, again, you can see how that looks like a random chart unless you know about the head and shoulders formations. Let's quickly go back to my other chart. Let me just clear that off. This is my monthly top-down analysis chart. Now, this will just quickly show you how understanding patterns that we're showing you today, combined with everything else we teach you, then gives you the probability on the trades that you take and more confidence, and builds more confidence for each trade. Now, this is my monthly top-down analysis, just like the top-down analysis I gave you on course lesson number 1, just on a different pair. If I just put that all on now, we can quite clearly see this is my top-down analysis. So just like I was showing you a minute ago with price breaking support and resistance, remember, let's go back to course lesson 1 and jog our memories. Price comes up, finds resistance at monthly resistance, comes back down in search of support. Price finds support, goes back up, finds resistance, broke through, price pushed up and came back down, straight back down, and has been trading underneath this resistance ever since. Tried to push back up, resistance. Tried to push back up, resistance. Came back down, can't break the support, so it's got a neckline here. Price pushing up, resistance, resistance. Now we understand that not only is there a right shoulder forming here, but we've also got another confluence for potentially taking a short trade, is the fact that we've got a monthly key level of resistance. As you can see here, left shoulder, head, right shoulder. Now, if I just clear that away, I just wanted to make it obvious there and see how you can now start combining the patterns also with the monthly key levels and what we've shown you on the previous lessons. We've just gone over the market structure, so we now understand there's many confidences here for taking a trade. Lower low, lower high, lower low, lower high, lower low. Anywhere between here, price could come up to and could be a lower high, and price could roll over, make that right shoulder and roll over to the downside. We can then look for, we can see we've hit monthly resistance, and then what we want to start doing is looking at what we showed you on the last lessons, which is price action, and then seeing is there any reason on price action to add more confidence to taking a trade. Now let me just get rid of this. I'm going to go back to my clear chart quickly and just show you what else we are looking at on this. So I'm going to give you more and more examples so you can understand. So here is a great example of how to identify a head and shoulders formation, but it's quite easy because this is on a daily time frame. So let's just zoom out. If you were looking at this chart, you could probably quite easily spot this. It's quite an obvious one. Now we're going to start breaking down and just going and looking through other areas of where we might find them. So now, strangely enough, on this pair, let me just drop down to the 4-hour time frame. But here on the daily time frame, we understand that the higher the time frame, the stronger the probability. But we also understand the longer it takes to play out. So for instance, if this was going to be a head and shoulders formation, and we were going to find resistance on this right shoulder, this could be a trade that we could take a short trade in, and it could take days and days and days to get down to these areas, and then you could hold for longer. So that's a swing trade. You can see here from this neckline up, it's taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, about 3 weeks. So it could also take about 3 weeks to go down. So that's what you would expect if you're trading off the daily time frame. But for entries, we don't look to trade off the daily time frame. We use the daily and 4-hour for confirmation of direction, and we enter on the lower time frames. Now let's drop down to the 4-hour time frame. So on the 4-hour time frame, we can start to see them and identify head and shoulders more. I more or less just use the daily time frame just because it was so symmetrically easy to spot there on the daily time frame, that I just wanted to break down the exact details of it, of exactly what it looks like. If you see it in the textbook, what I just showed you there on the daily time frame is exactly what you want to see. The left shoulder, the head, the right shoulder, it was perfect. But to be honest, we don't really look for them on the daily that often. If we see them on the daily time frame, great. If I see this on a daily time frame, you don't see it too often, because normally trends, the market's in a trend for a long time, then it has a head and shoulders formation form, and then it starts a new trend. So now if I see this on a daily time frame like this, then it gives me confidence that if I'm looking at a short trade, that I could be in a short trade that I could be holding for a long time. But really, I want to use head and shoulders to enter the market, like what we said at the start. So daily time frame, just like I said a minute ago, if you see a head and shoulders on a daily time frame, great, because what do we use the daily time frame for? We use it for direction. If we see it on a 4-hour time frame, great, because what do we use the 4-hour for? Direction. And then we start looking for them on the 1 hour, so that we can look for entries, and the 30-minute time frame. So write that bit down, guys, because that's what's really important. Finding them on the daily and 4-hour, perfect. That's what we want. We want to go on the hunt. We want to go and find these. We want to see where we can see them. But then we also want to look on the 1-hour time frame for entries, and we see them on the 1-hour time frame or 30-minute time frame. Can be a great way to enter the market, because the probability and momentum is behind you. And what I mean by that, the probability and momentum is, for instance, if this was on a 1-hour chart and I enter here, I can see that we now got that momentum behind us to help us push down. So let's have a look at the 4-hour chart and what we see. So 4-hour chart, here we can see this is just stretched out. This was that daily. This is dropping down from the daily. This is what we highlighted here. We can see this is the 4-hour time frame. We've got left shoulder, head, and right shoulder. Now that is very, very spaced out, and we don't normally use it that often. We don't use it like that too often. What I want to do is not on a massive section like this. I want to, so when I see tops like here, or when I see bottoms like here, or wherever I see bottoms like here, or if I see price moving down, price has made a run, like I see price has made a run here, it starts to slow down. But I'm not going to enter a short unless I start to really see signs of wanting to take a short trade, because this is moving up. But if I see a head and shoulders formation, what is a head and shoulders formation telling me, guys? Exhaustion. It's telling me that there's going to be a trend change. So let's have a look at a few examples here. So one jumping out at me, can anybody see what I'm going to go for first? One very obvious one here. Inverse head and shoulders. Perfect example just to start off with. Inverse as well. If I just flip my chart upside down, you'll see what I mean from what we were looking at to begin with. Left shoulder, head, right shoulder. Neckline, more sloppy, we'll go over that in a minute, but you can see here, 1, 2, 3. And this is another thing I was going to say when we're on a daily time frame, and you might have heard me say this a few times if you're paying very good close attention. What is the magic number in trading, guys? Number 3. Magic number 3, and we're going to be doing course lessons on that in the future. But the third retest of anything, remember, trend line lesson number 2, the third test of the trend line is where you want to be getting in. The third test of support where you want to be getting in. And here you can see a head and shoulders formation, left shoulder, head, right shoulder. Price is pushed down, so now we can see a bit more because we're dissecting it on the lower time frame. Price is pushed down, support. Price is pushed back down again, hasn't really closed too much. On the daily time frame it was different, there was a lot of actual bodies, but this is where you see them on the lower time frames and how you identify to enter. So left shoulder, head, and then come back down for right shoulder. Remember, inverse. When it came back down for the right shoulder, we can see it came down, so price is pushed up. It's trying to come back down one more time to try and make a new lower low, but it can't get past this support. This support is too strong, and what it's created is a head and shoulder formation. Then there's also, as I said, Fibonacci reasons why we'd look to enter this, which we'll be talking about in the future as well. But here, lovely head and shoulders formation. Now let's have a zoom out on the chart and have a look for some more and see where else we can find these. Now remember, 4-hour chart is still where you're looking for direction. So if you can see them on a 4-hour, it gives a higher probability that the market is going to change in direction. You see it on a daily, higher probability. See it on a 4-hour, higher probability. But really, once you identify it on the 4-hour, you want to drop down to the 1-hour or the 30-minute chart and start looking for where you can enter, and also start applying what we taught you in the previous lessons in order to gain your entry. So for instance, price action here, we can see a pin bar bullish engulfing. You might see, say, a morning star formation. You use the other things that we taught you to help you build confidences to take in a trade. For instance, if this was a monthly key support level, you'd have another confidence to take a trade. So let's have a look at just some other areas where we might see them. We don't want them all to be perfect, like on the daily time frame where I showed you that perfect head and shoulders, because they're not always going to be like that. For instance here, even here, so this is the top of a trend. We can see here, very hard to identify, but there is actually a head and shoulders here. What you can see here is left shoulder, a head, and then it made a right shoulder. I'll drop down to the 1-hour time frame and break those down shortly. Let's see where else we've got if we just zoom out. So I'll highlight some areas, and we'll also look at those on the 1-hour time frame. Let's just see. So down here, we can see the market has changed direction. You can see here we've bottomed out. We can also sort of see here, we'll look on the lower time frame here. We've come down, made support here, left shoulder. Again, you have to train yourself to see these, and this is why I want to give you ones that aren't obvious, otherwise you're not going to learn. Here, left shoulder, doesn't look like much of a support, but if this was in real time, you can see here it's found support, it's broken through, come across, broken above. They're not always going to be perfect. Sometimes you can have this is an inverse head and shoulders, but sometimes the head can be a bit bigger and won't just be perfect one push. You might see another push, price comes up, makes that right shoulder, and then boom. See the big move off the right shoulder? Here is a mini head and shoulders formation here. Didn't change the trend much. We can see here, left shoulder, head, tweeze the top formation, came down, right shoulder, evening star formation, boom, came down. Little move. Then it actually broke back up higher, but you can still see there would have been a trade there, still could have been some profit to be made there. If we actually look at this, sometimes it can be 4-hour, they can be head and shoulders within head and shoulder formations. So here we can see this is a left shoulder. Here, this support here, a bit sloppy. This one's very, very sloppy, to be honest. Left shoulder, broke through, you can see it came back, retested that right shoulder, bang. Let's just see if there's any more on the 4-hour that we want to quickly look at, and then we'll drop down to the 1-hour time frame and have a look at that. There is some here, but I just want to drop down to the 1-hour time frame because I want to start looking at where we would look at entering the market, because 4-hour is great to give us an understanding, but as explained, 1-hour and lower is where we want to look at entering the market. But where this helps is if you can imagine you were in a trade with this a long swing trade with this uptrend. Once you start seeing signs of a left shoulder, head, right shoulder, then that can tell you, okay, I want to get out of the market. I can also enter for a short. So if you're in a long trade, you take your profit, and you enter a short trade and come down. So that's a good understanding of a head and shoulders there. Now let me just drop down, let me even go to more recent times where we are here, and we'll drop down to the 1 hour time frame and look at examples of where we could potentially enter the market just using head and shoulders and a few things from what we've learned from over the past few course lessons. So let me just go back to, I'm just going to use this chart and just follow it and just see what we can see. So obviously we know that head and shoulders are at the highs. So here it was quite a fast sell-off, so there wasn't really much of a head and shoulders formation here. We might see it on the next lower time frame when we drop down lower. But what you can use to identify is that price comes up, makes a resistance. Price breaks above, comes back below. We've been using these on this. But price breaks below and comes back for a right shoulder. In this case, it didn't actually happen. There was no head and shoulder formation there. Broke below slightly, came back for what you could potentially call a right shoulder, but not really. It wasn't the most clearest and very hard to learn from. Now let's have a look at what price done as it moved down. Let me just zoom out here. So price came down, big push down here. Now if you only knew about head and shoulders formations, you would almost gain an entry here, because what have you got here? So the way to identify, a lot of the time it'll be perfect. The retest, the left shoulder and the right shoulder are normally, you will normally always get a retest perfectly. Sometimes it can be slightly slanted, which I'll go over soon, but normally you'll get perfection. There might be a bit sloppy in the way it looks. It doesn't play out like it shows on a textbook, which is why I want to give you examples here that aren't textbook and don't look perfect. So you can, when you look at them in real time, you'll understand and see what is valid and what isn't. So price comes back down here, and never buy on the first touch of support or the first form of support. Price is always going to come back down, but if price can't sustain, it's going to push back up. Then price comes back down for the third touch, the magic touch, and what's happened? Boom, you've gone up. Simply from there. So here, if you were in a short from this trade up here, if you managed to get a short trade and price was pushing down, see price action, bearish candle, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, then you're still in this trade making profit. It comes up, makes a lower high, but then I'll understand that I'll have this level marked out as a level of support, that this could potentially be where price is going to reverse and change. And you can see here, that's exactly what it done. Left shoulder, head, right shoulder. So it's reversed from there and made a move back up to the upside. Then here, price has moved up. Again, not a great example, but let's just look here. Price has sort of moved up here, made a left shoulder, a bit of a head, bit of a right shoulder, 1, 2, 3, magic number 3, and then it's dropped. So left shoulder here, neckline, head, just taking out the prior high. If I drop down to the next time frame in a minute, we'll see that. Just taking out this left shoulder here. As I said, it normally will always meet perfectly. So if you imagine that's a left shoulder. Let me just get it right on top. Imagine that's a left shoulder, head, right shoulder, bang, it's dropped. To change of the trend there. Now let's just go back. Let me just get rid of these because we'll come back to these on the lower time frames in a second and see how they look. But a great place is to get an entry into the market when you understand them, and once you start spotting them, and also then once you start coupling them up with what we taught you in the prior lessons. So for instance, if this is on the 1 hour time frame, so if we're looking for an entry here, price comes back down for the third touch here, we're looking for price action to say, okay, why should I buy here? You might see a morning star formation, you might see a bullish engulfing like here. So you see price starts moving, so you could get into the market here with a stop loss below the low. And then you can, for instance, if we just played it out as a potential trade, if you wanted to jump into this trade, you could. Stop loss about below the last low, and then you can see price moves up and makes a nice move up to the upside. But you'll be looking for price action, and again Fibonacci, which is going to be something that will come over soon, would also help us understand when to get into that trade. Now let me just zoom back out on the 1 hour a little bit more. Here you can see comes down, left shoulder here, head, right shoulder. You want to see for these drives that the drive down, just look for these pin bars a lot of the time on these head and shoulders. See the drive down, pin bar normally at the bottom of a trend, pushes back up, pushes down, pushes back up. See how the right shoulder might look sloppy, but it works. These are what you want to look out for. And then once you're in this trade, you've already identified there's a big wick here. So what we've shown you in price action, remember there's a wick there, so it shows us there's rejection here. So then you drop down to the lower time frame. Then now you understand about head and shoulder formations. You can see left shoulder, head, right shoulder. A lot easier to see on the 1 hour time frame, and you can see how often they come. Then price from here, say we've entered on this right shoulder, but also just to show you as well, guys, is see how have you seen how on a few times I've showed you that right shoulder, have you seen how quick that move is? So if you set your buy order here, you can get a quick move up. Here you can see how it comes back down to test this area of resistance and then makes a quick move up. But see how quick that move is compared, or big that candle is compared to the other candles. So you can see how that third touch, if you understand and can spot these and you understand risk reward, you can also set buy and sell orders here as well. Let's have a look. So if you had a push up here, so you're in this trade, you're making profit, price is coming down, made a higher high, made a higher low. Price is moving up, making higher highs, higher lows, higher highs, higher lows. Then what we can see here, if we just zoom out, use the wicks to help you. Use the wicks to help identify, like I just mentioned here. See the drive down. Sometimes you want to zoom out. It might help you understand the market a bit better. You might want to zoom in, depending on how you read the market. Sometimes if I zoom out here, I can see by the wicks and it can become a bit clearer, because I'm using the white on the wicks to help me identify. So here, for instance, left shoulder, head, right shoulder, it's happened again. So now what this shows me is that got into a trade here at the bottom, right shoulder, bang, now I'm making profit. I'm moving all the way up. What is that? 152 pips. Then now I'm looking at this time frame, or at the top of this move. So I know that this move is on the 1 hour. It's soon going to run out of steam. It's soon going to be exhausted. Here, left shoulder, like what I've done earlier. Or you can simply, is once you've made a resistance, just simply put a horizontal ray here, like I've done here. Horizontal ray, let price push up. If you're in this trade, fine. If it comes back down and retest, then see this retest here, and then what's happened? We've seen that sell-off, bearish engulfing from the price action previously, bearish engulfing, sell here, stop loss above this high, boom, comes back down, continues coming back down. Let me just zoom out. So this is just on the recent price action I'm highlighting and just going through it, rather than going back through old type. Like this is recent price action, so you can go back in and have a look at this yourselves. What else have we got here? Here you can, again, I'm going to show you. I could easily sit here and show you the perfect ones where it's easy to identify, but you're not going to go away from this video because you're not going to see the perfect ones that often. But I'm going to go over ones that some people may even think that's not a head and shoulders formation, because it isn't what you see in textbooks. But believe me, it is, because you're going to see how much it works if you go and keep practicing. Here, there's a left shoulder here. It's made a resistance. So just like I said a minute ago, get that horizontal ray, put that horizontal ray on. Then let price break up, breaks below. Then look what happens. You can see the wicks. You can see here. I'm going to clear this off because I don't want to use this right now. We're going to drop down to the lower time frame in a minute and see what else we could use to look for entries. Here, left shoulder, resistance come up, price pushed up, pushed down towards this neckline here. As you can see, this area of resistance, we've got a neckline here, but price is pushed down, just like, remember, this is on what I showed you on the daily time frame, but remember the daily was perfect for us, but not everything's going to be perfect. You need to train your eye to spot them when they're not perfect. Here, price pushed up, left shoulder, came down, found support. This will become more identifiable on the lower time frames as well. Made a head, came down. Made a right shoulder, you could enter here. Broke the neckline, like I showed you on the daily time frame, came back down, came back up,
to retest the neckline. Remember I said where you see the big sell-off, because now everybody knows that this is it's broken the trend or broken the structure. So when it comes back here, everybody jumps in here, and then you can see the big sell-off, and then the big sell-off happens. But here is where this is the neckline. But here, when I'm highlighting these, I'm highlighting the shoulders. Left shoulder, head, right shoulder. So I'm not sure if I made that clear. That's the head on each one. Here was quite close, but here we can, I'm identifying the shoulders here. That's the left shoulder, that's the head. No, sorry, that's the left shoulder, that's the right shoulder, and this is the head. Same again over here. This is the head. This whole area is the head. Left shoulder, right shoulder. Let me see if there's any more in this 1 hour time frame before we drop down to the 1 hour. So you can see how on nearly every top and bottom, they're more or less there. It has a very, very acute eye to catch that one at the top, and it happened very, very fast. Let's not zoom out too much. Let's just come back down to the bottom. Again, very, very sloppy, but again, found support here. We zoom in here. Left shoulder, head, broke up, made a right shoulder, that drive down. It can still be classed as a head and shoulders formation. We will highlight this and we'll see what we see on the lower time frame as well. Doesn't really look like a head and shoulders formation, but believe me, it is, because the market's carrying out the same formation. It's carrying out the same practice. So even though it might not be clean, who cares about clean? Who cares if it looks great? We don't always need to be perfect. We're in here to make money. So as long as you know what the method is behind the head and shoulders, that's what we need to know the market's doing. What the market is doing is coming down, making a test of support. It's coming down, trying to make a lower high. Breaks back above, retest that former level. If that holds, you can buy. And that's what we need to know. Let me just go out a bit more. I think we can finish off with the 1 hour time frame and then move on to the next. But if we see it time and time again, can we go up to recent? Look here, you can see left shoulder. What happens here? Price goes up, makes the head, comes back down, retest that right shoulder, boom. See the big movement, guys? See the biggest sell-off? The biggest sell-off candle was here. Left shoulder, again, put that on, horizontal ray, let price push up, be patient. If it comes back down, it comes back up here, find a resistance, sell. And then sell off here, comes down. Then now left shoulder, head, right shoulder, comes down. Do you see anything here, guys? Again, see, if you use the wicks, look at the wicks. The wicks can help you. They can give you the signals. Remember what we said in price action part 1. They can give you the signals. Again, left shoulder, head, right shoulder. So you can see here, left shoulder, head, right shoulder. See when it came back to retest that right shoulder? Remember, inverse? That's the head. There's your sell. So here, left shoulder, drove through, head, came back up to the neckline. Let's zoom in here. Left shoulder, neckline, because it's upside down. Let me flip this the right way around so you understand. Left shoulder, neckline. Head, neckline. Right shoulder, bang, drop. Or the right way around, buy, pushes up. You see how it happens again? It's always 1, 2, magic number 3. 1, 2, magic number 3. See how sloppy it is, guys. But what you've probably been taught in textbooks is that it has to do the symmetrical head and shoulders. No, it doesn't. Just as long as it's following the practice of what head and shoulders means. As long as the market is carrying out what the market is doing, that is retesting 3 times. So see here, left shoulder, head,
right shoulder. This is on the 1 hour time frame, but I'm sure that if we drop down here on the lower time frame in a minute, we're going to see this play out more obvious. So we can see here, left shoulder, head, right shoulder, came back for one more test, boom, went down. Now we get into the nitty gritty of it. I'm going to show you on the lower time frames. Left shoulder, head, bang, broke back above, right shoulder, boom, goes. Now hopefully you're starting to see a little bit more and a little bit more as I go into it, a bit more detail. So see how it happens at the top, see how it happens at the bottom, see how it happens at the top. So as I said at the start, why we love these, or why I love these, is because in a swing trade you can get in at the bottom and have this big move up, and then if you identify at the top you can get out. Now can you guys identify one there? Most people can't, but this is when I started getting obsessed with head and shoulders formations. And for a while when I first started learning, some of you may go off and do this as well. I only used to use head and shoulders formations. I used to get great entries because I just knew how to spot them. Some people can't spot them, but that's why I'm showing you so many variations. There's one here, it's so obvious. Left shoulder, but again, see the wick, guys. Use the wick, see the drive up, down. You might think this is a very, very bullish trend, it is. But we got a high high, we got a high low, we got a high high. But here, use the wick. Look at the drives. So see here, see what I'm saying about the wick. See the drive down and the push up, then the head, then the push up. But see the drive down, see the wick it leaves. That's almost a telltale sign. Obviously, it's a telltale sign for head and shoulders formations because it shows me you've got that strong left shoulder. You can see the formation. It's a strong left shoulder. Then it pushes down, make the head. Then when I see that wick like this, it's like it's helping identify the head and shoulder formation. It's making it clear that that's a right shoulder. So here you can see that wick there, left shoulder. Price pushes up, comes back down. What does it do? Right shoulder, bearish engulfing. Even if you didn't enter there, price action that I taught you on the last lesson, bearish engulfing, comes here and boom, comes down. So there's your head, there's your left shoulder, and there's your right shoulder, and it comes down. And then you keep following price down, you keep following the trend, you keep holding the trade for days and weeks if you need to, depending on what time frame you're on, until you start to spot a head and shoulder in the opposite direction. For me, I haven't seen a head and shoulder in the opposite direction here. I've seen a drive down here, but price could easily come back down now to make another drive down into this region. So if you just zoom out here quickly on the 1 hour time frame, just since we go here, the 19th of April, it's the 28th today, that's less than 10 days. You can see here how many we've identified just on the 1 hour time frame. 1, 2, 3, 4, 5 on one pair in the market. Let's now drop down to the 30-minute time frame and look at those areas that we've highlighted and watch how much clearer they become, and let's watch how you can enter the market and start making lots of profit. So this one here, left shoulder, higher high, higher low. This is the neckline, yeah, from the higher low. You can see here, this is also the resistance. This is very similar to the daily one that we drew. Now just imagine this was the daily time frame. This is very similar to the daily time frame that I started the video on. We came here, higher high, higher low, market structure. Higher high, broke through. What's here, guys, from the last course lesson? Tweezer top formation, 30-minute. Tweezer top, signaling weakness in the market. Then if you're patient, price comes down, price came back down, it's found support where? At the equal higher low. Price is making a run back up to try and go on to make a what? It's trying to make a higher high. But price is met at resistance. But if you now understand head and shoulders formations and understand that resistance is there, you're going to be aware of this, so you can take some profit. Then what happens? Price breaks that down to the downside, and just like I explained, once it breaks the neckline here, it's confirmed
that the structure is broken on this time frame. So higher high, higher low. Hasn't been able to make a higher high, but what it has in fact done is made a lower high. So this is now starting a new trend. Lower low, lower high, lower low, lower high. And it's broken through this uptrend, broken the market structure here, broken clean through, price breaks below. What do we expect it to do? Come back and retest as resistance. And then, like I showed you on the daily time frame, sometimes what you might see is price come for a third touch of the trend line. Where in this case, you can see that's already happened. This is where I want you guys to enter. So remember, this is the neckline. But what I've been drawing on all of these charts on the 1 hour time frame, and why I'm dropping down to the lower time frames, is this is where I want you to learn to enter. Because here is that drive, that's the left shoulder. Here's the head. Enter on the right shoulder. A little bit more high risk, but with more risk, higher reward. Here, you can place your stop loss here, place your stop loss above the last high, but there's 3 confluences for a trade here. Can you tell me them, guys? Well, there's 4. Here we've got lower low, lower high, lower low. We can see here we've come back up. We're making a lower high. So lower low, lower high, low low, lower high, lower low, lower high. We've also got 0.1, 0.2, 0.3 on the trend line. We've also making a right shoulder. And we're also retesting the level of resistance, and on the 1 hour time frame we saw that bearish engulfing. So there's multiple reasons to take a short trade here, and even if we take a Fibonacci, which you don't know about yet, which I'm going to be teaching you, you can see here that it's actually came back up, tap the Fibonacci level, and then come back down to fulfill that Fibonacci. But here is just from the 1 hour time frame. We just dropped down to the half an hour time frame, and we've explained, or we've shown how we can identify if you can identify on the 4 hour or the 1 hour. Usually you want to identify them for direction on the 4 hour, but you can identify them on the 1 hour. It can show you a good high potential that the price is going to change direction, and you can then look for entries. So identify them on the 1 hour, and then you can drop down to the 30-minute chart. So if I just go back down to the 30-minute chart again, we've understood that one, and I think you can quite clearly understand now from all the previous lessons that we've taught you how to enter the market there. Now let's look at some of the others. This one was a big sell-off, so there was no entry there. But when price came down, it made a lower high. Made a lower high here. Not a neckline. Didn't come back down to the neckline. But as I said, it won't always be textbook, guys. And if you're going to try and trade off a textbook, you're never going to win. Sometimes it can be sloppy like this. You might just see something like that. But it doesn't matter, because still what's happening? Left shoulder, head comes down, broke through the left shoulder resistance, as you can see. And what's it done? Come back up, retest the right shoulder, bang, down. 1 test, 2 test, double top, something we're going to speak about in the next lesson, bang, came down. But you can set your sell order here as well. And you can see you can make a big move down. Then let's go down to these lower time frames, or down to here. Here, we spotted this on the 1 hour time frame. Now we can see left shoulder, morning star formation, pushed up, made resistance, came down, made a head, inverse head and shoulders. So it's upside down. So it's came down, it's made a head, pushed up, retapped the neckline, came back for that third touch to make that right shoulder, and then look, bang, look how it's flown. Look at all this crappy price action, but then on that third touch, boom, then it goes. Let me flip this upside down, because you're used to seeing it from the example at the start. Left shoulder, again, see here, that form of resistance, broke through, resistance, support. Came up, made a head here, came back down, found support. Came back up for that right touch, boom, gone. Sell here, stop loss above the high, wherever you want it, you're making profit here. Now let me flip this upside down again. Here, this one, not so clean, very, very sloppy. Probably not too, you can't really call it a head and shoulders formation, but it can be classed, because you can see here, you've got left shoulder here, you've got a right shoulder here, that's a head, and then you've got a right shoulder here and here. Bit of a range, but it's broken out. But see,
it's not so much about how the head and shoulders looked, it's about what the head and shoulders is doing. The head and shoulders is all about exhaustion. It's about the third attempt. It's about price not being able to break up higher. Price is come up here, made a high, came down, made a what? Made a neckline. Price has then come up, made a head, price came back down towards the neckline. Price came back up, right shoulder, couldn't break, bang. Right shoulder forms the head and shoulders, and then price moves down. Then you look at this one again. Here, left shoulder. Did we look at this one already? I don't think so. Morning star formation, came down, head was playing around here. You can see this was the support, came back, couldn't break above this support, now turned resistance, broke above, retested a support, gone. That was the right shoulder. That's on a 30-minute time frame. So now we can see multiple places to enter the market, all within the last 7 days on this market. And this is all within, if I just quickly go to the daily time frame, hope it doesn't mess up my charts too much, but this is all within a higher time frame head and shoulders. Remember from the start, the head and shoulders we're looking at left shoulder, head, right shoulder on the higher time frame. But look how many head and shoulders we found in between. Just from here over to here in the last 7 days, we found 1, 2, 3, 4, 5, 6, 7, 8, 9. But this is on the higher time frame. So see, we need to go down to the lower time frames to understand what the market is doing, and that's how we can get our entries. Now if I just drop down, we were on the 30-minute time frame. Just to wrap this up, and guys, if you have any questions, please leave a question on underneath the video on the comment section. We will have a look, we'll get back to you, and let us know if this is helping you understand and if you've got any questions. So that was on the 30-minute time frame. Let's now go to the 15 and let's just see, was it any clearer? 15-minute time frame. Let's go back up to this one, see how much clearer it looks now, and then you get more confidences as well. Remember, when entering a trade, you need to flick through all the time frames to gain your confidences and confidence to take a trade. Left shoulder, head. See here on a 15-minute chart, what is that candlestick formation, guys? Evening star formation. See, and what did we have here? 0.1, 0.2, 0.3. What we taught you in the prior lessons. See how everything we're teaching you is step by step. And now, because if we show you head and shoulders, you wouldn't have understood at the start. You wouldn't have understood what this was. Don't let head and shoulders go over your head, guys. I'm telling you, go back and back test this, because you'll see it'll help you get your entries so well in the market. Let's just go back to the 15-minute time frame onto some of the others. Again, we've got left shoulder here, head, right shoulder, morning star formation, 1, 2, 3. Morning star formation, off support, 2 confluences, got a Fibonacci retracement there as well. We can see broken resistance, come back and support, morning star formation, 1, 2, 3. Could buy here, stop loss below. Let's just have a look at what that setup would be. Even if you bought here after that bullish engulfing, stop loss below that bullish engulfing, push up 6%. Now you wouldn't take out here, because now that you know and understand about head and shoulders formations, you know you don't need to get out of your trade straight away. Because what are you going to look for? You're going to look for head and shoulder formations in order for you to want to get out and potentially enter the market in the other direction. So that's another thing. It helps you from getting spooked out and getting out of a trade too early. Because if you understand that head and shoulders formations on either 15-minute, 30-minute or 1 hour time frames, that you need to see them, you need to see the market start to accumulate to come against you. Just like this move down here, if I was short from this move here, if I was short from this move here, from this right shoulder, you have patience in the market. Head and shoulders, understanding them helps you understand to have patience. So when price moves down and it hits support here, I'm not thinking,
oh, should I get out of this trade? I'm worried about my profit coming back up and losing some profit. I know that the market has to bounce, has to find a floor, and has to make a head and shoulders formation on the lower time frames in order to change direction. So here price is pushed down, I see a support, I say okay, I see price has made a support. Once price breaks below support and then breaks back above, then I want to be thinking, okay, well, maybe now I want to start taking profit, because I can see there's a left shoulder here, I can see there's the beginning, there's a head here, so there's half of this head and shoulders formation has been complete. So all that needs is a price to break back above and to come back and retest this to complete it. So therefore I want to start looking at taking some profit out, and then I want to start eyeing up taking a long trade. So I make money on the way down and I make money on the way up. Now once the price gets up here, I don't take profit out straight away, because this could continue blowing through the ceiling or blowing through the roof. But price makes resistance, my profit fluctuates, comes down. Price comes back up and makes a head, and I can see price rejects this level and pulls back down. Now I'm not going to get spooked out, but I understand, okay, well, I've now seen that half of this head and shoulders formation is created, left shoulder, a head, and all we need now is a right shoulder, and this could start dropping against me. So then I go, okay, well, let me take my profit now, because this move hasn't been able to continue up higher. So there's quite clearly some form of resistance here. So I'm going to take my profit, my 6% here. I'm going to be happy with that, and we're going to close out. But what I am now going to do is start looking for that third touch, for that right shoulder. Price comes up, makes that right shoulder, stop loss above the last high, move down, moves all the way down. Then when price comes down, makes up its first level of support and moves back against me again. So when price finds this support here and moves back against me again, I'm not going to get scared and think, oh, let me take my profit too soon. What do you need to see in the market, or what it does head and shoulders do? It shows you that the market's going to change. So see how important it is, not only to get an entry, but also understanding when to take your profit and get out. Because here, I'm not going to get worried, because I know that it's found support. I know it's got to come back down and make a new lower low. Then it comes back up. If it can't go back down and make a new lower high, and I can see that price is starting to make head and shoulders formations here, even here, you can see this drive down, this left shoulder here, head, comes back up, right shoulder, right shoulder. So here, once price starts doing that, I know to get out of this position, and then I want to look for taking a long trade, because I can see that there's a left shoulder here, a head down here, and then a right shoulder, and price moves up. Then I want to hold on to that trade until I see something that makes me want to get out. And that is head and shoulders formations, guys. And that is how you trade them. That's how you identify them. We've looked at one on the daily time frame. We've looked at some on the 4-hour time frame. We've looked at some on the 1 hour where we want to enter, and we've looked at some on the 30-minute. And we've seen some great examples here. That's on the 15-minute and 30-minute. That's the 1 hour time frame. This is just a few examples, but I'm sure there's much more if you wanted to go through it. You can see the amount of trades that are potential there once you start just looking for these. I know a lot of you guys will probably just start studying these and fall in love with head and shoulders formations, and then we go all the way back out to where we begun, and we can see that it all brings back to on the higher time frame, where we can use that higher time frame of bias to take a short trade overall, because it looks like we may be forming that right shoulder, and we could see this roll over to the downside. That is head and shoulders formations. I hope you've understood that and took it on board. Please let me know your comments, and if it helps your trading. If you've got any questions, we can answer them in the comment section and cover it on the next video, because you like to overlap slightly, so we'll just talk about it at the start of the next video as we go on to showing you how to trade double tops and double bottoms, which is very, very important as well, and starts to lead into a bit of liquidation and manipulation talk coming up soon. So there's some really, really good lessons coming up. Hopefully you've enjoyed that. Hopefully you've understood that. I hope you enjoy it. I hope you go back and back test and find these all over the place, and I hope that this makes your trading better, and I hope it makes you lots of profit. Enjoy, guys, and I'll see you on the next lesson. Thank you.